Well, I don't think they're going to go at all at this meeting. I mean, I think they're focused on the bank failures that roiled the banking system and markets over the last couple of days. I think there's, policymaking 101 is if there's a lot of uncertainty and there's a boatload of uncertainty here, then you need to be accommodative, err on the side of providing too much support. And so I think they're going to apply that principle here and decide not to raise interest rates at the meeting next week, despite the inflation numbers, despite the job numbers, which by themselves would have argued for at least a quarter-point hike, maybe a 50 basis point hike, a half-a-point hike. But I'd be pretty surprised if they could surprise me, but I'd be surprised if they decided to raise rates in the context of what we've been going through over the last few days here.
Mark, you do have a point, and Goldman has echoed that as well. Seems like they need to manage the optics on the situation first before going ahead with the rate hike. But Carl Icahn had this to say about the expectation on rates at the next Fed meeting.
I don't think you have a choice. If you don't keep going on, I really believe that the problem of inflation can become such that it's very difficult to get out of it. Hey, maybe there's something we could, that happens. Maybe there's some miracle, but you do have inflation. I mean, look, if you stop, if they don't raise rates next week or next month, I don't know, but I really don't think this is a choice, Scott. I think you can't have inflation in this country.
So the market is split, and I think the odds are still favoring a 25 basis points hike. But Mark, I do want to get into the specifics of what Moody's is saying about how vulnerable the banking system is, despite the stock market having moved on. Well, moved on for a bit at least. There's still volatility underneath. What do you think happens next in terms of the financial stability angle of things when it comes to the regional specialized banks?
Well, I think they're fine. I mean, at the very least, because of all the government support, right? Because the FDIC, the Fed, the Treasury came together and decided to guarantee all deposits, those that are insured below 250K and those that are above. And the Fed also established a credit facility to provide liquidity to the banks so that they can make sure that they have the cash they need to pay off depositors. And more broadly, that move, that very aggressive, intervention in the market, is a signal that the government is going to do whatever it takes to support the banking system. And so, that alone, I think, should give us confidence that the system is going to hang together well. But even without that, I think the fundamentals of the system are in a pretty good spot. I mean, there are banks that are in trouble, but they're idiosyncratic. They got tangled up with the problems in the tech sector and the crypto market. And outside of that, the system is well capitalized, highly liquid, good risk management. I'm not at all concerned about the banking system, in general.